Schwab Advisor Services is a proud supporter of the RIA Edge Podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com. Hi, everyone, and welcome to the wealthmanagement.com RIA Edge Podcast. I'm David Armstrong. I'm the editorial director here at Informa Connect's Wealth Management Group. And this is the podcast, as you know, where it gives me the chance to talk to folks in the RIA industry who are really dedicated to helping RIAs grow by design and not by default. So today, I'm thrilled to be talking to Jalina Kerr, who is the Managing Director of Client Experience for Schwab Advisor Services. Jalina, thanks very much for joining us.
Thanks for having me, David. It's great to be here.
So this is going to be a little bit different because normally we talk to executives at RIAs who are growing their firms, really understanding their clients, and there's a great emphasis on the client experience when they talk about their strategies. We know the whole bit about consumer expectations for client experience in consumer world. Same kind of applies for the financial services world. It's always lagged behind a little bit. But here we're going to take even one step further back and talk about the experience of the advisor with the vendors and the partners that they use and what they expect out of that. So before we get into that, can you just maybe take a step back, and for the folks who aren't familiar with you as well, tell us a little bit about you and your role there at Schwab?
Yeah, I would be happy to. So I head up our advisor experience and platform solutions functions. So all roads lead to Rome in a way, because essentially the advisor experience is steeped in all of the aspects of the RIA industry. So our team runs the platform, the digital platform and technology that powers Schwab Advisor Center. We are also responsible for all of our wealth management, investment products, banking products that advisors are using to curate strong solutions for their clients. And then we're working in concert with the rest of the firm too, to try to bring new and innovative solutions to bear for advisors and investors alike. So we've got a lot going on here, but it's an exciting role and it's an exciting time to be an experienced professional, because the table stakes are growing every day.
Yeah, for sure. And, we have talked a lot about the client experience on this podcast. You're, I think, interestingly looking at the advisor as the client, obviously, and thinking more about their experience. And I think, and I'm not at all suggesting it's relatively new to you all, but I think a lot of people who started looking at advisor technology and advisor vendors maybe 10 so years ago would be kind of shocked at how, that was never the focus, was not the experience of the client, the experience of the advisor when they're using this stuff. Advisors were thought to be, they're just fine with old interfaces and clunky integrations, and it was never an emphasis. That's definitely changed. I think it's a generational thing too. How do you guys go about knowing what it is that advisors are looking for in terms of the client experience or the advisor experience with the partners that they use?
Yeah, it's been an interesting evolution, as you point out. It used to just be about what can I do and how can I get it done as fast as possible without thinking about some of the emotional elements or some of the friction that might exist. So I think where we're at now, relative to thinking about advisors specifically, is really focused on that ease component, but really ease through the lens of what do they need? What is the point of interaction they're at with their clients? So even though we're uber focused on the advisors themselves, we can't lose sight of their clients too, because at the end of the day, we're here to make the advisor look good with their clients, not bad. And so it does all have to kind of come together in a way. So we try not to lose sight of the advisor's client, but recognizing that the advisor themselves is the hub of the relationship. They want to stand tallest. And so the experiences that we're really trying to design for the advisors are with that in mind, and to really make sure that ease, that intuitive nature of some of the solutions are really in place. And I think, the thing that we're trying to do right now is really introduce and embrace the level of scale that we've reached now, given given our size. And sometimes that can be easier said than done. We can deliver scale, but delivering scale with personalization is really key, I think, in the whole of the model that we're trying to evolve for advisors. And I think really, David, at the end of the day, you've got to, and we listen religiously to our clients. We have, since we've been in existence, but I would say over the past 5 years, we've added more and more listening posts so that we're getting that feedback both in the moment from advisors, but also at points in time so that we can sort of understand broader sentiment. But really, like if you think about our digital platform, we've introduced a lot of easy scores. We want to know right in the moment, where are those places where they're running into friction and can't just immediately serve up to their clients what they need to serve up.
And so there's an ability to scout those flags when they pop up over the landscape there, if there's some problem or friction arising.
Yes, and I would say the tools and technology here have helped our cause. We actually take all of the listening posts that we have, whether it's a survey, whether it's an exit sentiment from the platform, as I alluded to before, and we scrub all of the data that we get out of that through a text analytics tool, and it lets us bucket by themes. And then you can overlay that with, here are the things that advisors are using the platform for the most, cross-reference it with those places where we seem to be hearing outsized amounts of friction, and go at them methodically. And that's basically the way that we've structured our ease of doing business program, is to sort of marry high volume with high sentiment and tackle those things that are creating the most friction, and really go at it from a multi-pronged approach in terms of what we're hearing from advisors. And we have other ways of listening too. We have panels and boards that we do. We have advisors who serve multi-year terms on panels with us, and we bring these things to them regularly. If we're hearing a certain sentiment, say about onboarding, which is always a complex and challenging topic for advisors and firms to try to figure out how to curate that workflow within their tech stack. If we know that's a pain point, we can bring it to our client experience panel, get feedback real time from them on what we could be doing differently, how we might want to reimagine that flow end to end.
That's interesting. It's almost in the same way that advisors are surveying clients or should be. Do you see any parallels between how you're responding to your clients' needs and how the advisors are responding to their clients' needs?
I do. When we're talking with a lot of advisors, they too are invoking a lot of different listening posts within their client base, whether it's through their portal, whether it's through roundtables and focus groups. But I think they are also leaning in to make sure that they're listening more. I think, for us, we may have a more captive audience in terms of not because the clients aren't engaged, but there's always that tension with the RIAs who want to make sure that they're adding value when they're talking to their clients. And so I think they have to be really, really thoughtful about how they go about that and about how they're gathering that feedback from their clients, to continue to strike that balance of relationship first, solving challenges for their clients first. And, then I think they can focus on how do they improve that ecosystem for their clients and get feedback from their clients to inform that. So it's a bit of a value chain. You've really got to earn the right to ask for it, I think. And I think that a lot of advisors have done that really well, and others are more nascent in their journey there.
Yeah, for sure. And the idea of simply listening can go a long way, right? I was going to ask if you collect all this feedback from advisors, it goes into the text analysis and spits out some areas of concern that goes to the developers or wherever it goes, and you roll out in maybe a certain time frame a solution, or is a sort of an iterative process of, yeah, we hear you, we can make a couple of quick adjustments now, and some other stuff's a little bit further down on the roadmap. How do you think about the responses to the flags and the complaints, if you will, when they come
you're hitting on, I think, the most important part of listening. Listening's great, but if you don't do anything with the feedback you're getting, that's not really proving anything out for your client. So I think a lot of it, though, depends on the complexity of the challenge you're tackling. I can give you a very specific example relative to our tax withholding election policies and post TDA integration. We got a lot of feedback that clients from the TDA side of the platform were not particularly enamored of the way that we went about that. So we made an immediate change and said, we'll suspend our policy while we think longer term about how to fix the technology that's underpinning our prior policy decisions. So we reacted in the moment and said, we hear you, here's what we can do right now. It's not the perfect fix, and there's still some clunkiness on the technology side of the equation. But since that time, we've now launched the underlying technology fix to shore that up. So this one was more of a lengthy process because of the complexity of the build that had existed in the platform. You mentioned it right at the start. You build it one way because you think, hey, this is easy, it's faster, we'll get this done. And then later, when you come back to try to optimize it, it can sometimes take longer because of the way that the technology hardens over time. So just a real life example of, some of them are easy and you can say, we'll have this fix in a week or 2 weeks. Others have a longer tail, and it's all tied to sort of the complexity of that coding and the technology infrastructure that we're working within in a pretty massive platform like Schwab Advisor Center.
Yeah, and I think folks don't, maybe some do, but they shouldn't underestimate the complexity of integrating the TDA platform into the Schwab platform. I mean, that's a massive, massive undertaking. Folks who even have like a small understanding of technology and web-based portals and platforms, particularly in financial services space, can understand that that's not at all an easy thing to do. The specific example that you raised was it on the tax platform?
Mm-hmm. How tax withholding was being handled for the platform.
Yeah. Were there any other areas that kind of in the wake of that integration, sort of the flags went up and you thought, okay, here's one thing that's advisors are really reacting to now and we have to focus on?
I think a lot of it comes down to just differences of what they were used to on the TDA platform versus ours. So that's another area. When we think about just navigation and usability within Schwab Advisor Center, that we got a lot of feedback about and that we've been making changes on. I would say this is one that incrementally you can do some things to make changes more immediately, so that as a client's navigating, things make a little bit more sense in context of the client work that they're trying to do. So I think that's an area where we've just continuously been focused on delivering value throughout the last several months, I would say. But I think specifically, we've also inherited it in a more active trading population from the RIA side of the equation. And so we got a lot of really good input relative to some things that we needed to think about, even though we acquired really strong technology in the form of iRebal and ThinkPipes. There's always work to be done, especially for people who are trading quite regularly. And so we've made some enhancements to how we handle fixed income allocations. We've got about 60% of our trading volumes running through our fixed channel. That channel has to be resilient and has to be flexible. And so we've made some enhancements there, again, as a result of this different population of advisors who are using tools perhaps a little differently than some of the installed client base were historically.
Yeah, I mean, the TDA advisors were certainly often more active traders, perhaps smaller books of business, but pretty active. We talked a little bit about the integration. Does the service component come in here when we're talking about the advisor experience? The ability of a advisor to pick up a phone and talk to somebody at the office. Do you consider that part of the client experience?
Absolutely. It's part and parcel of the experience. I think mistakenly, a lot of people automatically assume that the experience is all about technology. It really isn't. It is not technology. Client experience gets enabled by technology and powered by people. And the people at Schwab are really focused on continuing to shore up, I would say, knowledge and depth of expertise. If you think back to not to keep going back to the integration, but it's a big point of shift for us just in terms of resourcing. We hired a lot of additional service professionals to make sure we were ready to support the broader base. And we also had to then upskill all of the existing very knowledgeable TDA professionals on our processes. So over the course of a couple of years, that translated to really training or onboarding or upskilling roughly 800 service professionals. And so, as you can imagine, in a complex ecosystem like the RIA space, it takes time to become an expert in that area and across the variety of topics RIAs are leaning on us for. So that's an area that we continue to focus on, shoring up some additional upskilling, just because of the sheer quantity of headcount we had to add. You start, much like any training, you have building blocks, you do foundational things, you try to tackle the biggest, most simple things that you might need to train someone on, and you build from there in terms of complexity and variety of topics. And so that has been well underway. I would say even for the last 9 months, we've added an additional 40,000 hours, which is a hard number to wrap my head around sometimes, worth of training for our service professionals, because we know that's where the rubber meets the road really for RIAs. The last thing you would want is for one of them to call and leave that call feeling lack of confidence in the answer they got, or some sort of tenuous, like, well, I hope this is right. That's not what we strive for. And so we know, based on some of those inputs that we got, that was an area of focus. And we've been doing a lot over the past months to really try to bring that level of skill and expertise up to what it was, a few years ago. And it's a larger part of our ecosystem. We have 2,000 service professionals serving advisors in one way, shape, or form. And so it's a lot of people that we are trying to make sure they are having a good experience and getting the info they need to appropriately serve advisors and get them what they need in the moment. And of course, as we talked about, right, the ecosystem's always changing, whether it's a new tech, new product, a new service offering that we have. So we're chasing it every day.
That's a 2,000 people. That's a pretty high service rep to advisor ratio. Yeah?
It is. It is. And of course, we personalize those experiences where we need to. If you have certain firms who have a deeper complexity, maybe they're engaging with an outsized quantity of third parties because of the complexity of their business model. We try to acknowledge that in the type of model we apply. Correspondingly, if you have advisors who are largely digital, largely self-sufficient, they're not picking up the phone and calling us as much, but we want to be there and be ready for them when they call us with that thing that has a more complex need that they do need to pick up the phone for. So certainly a balancing act, but yes, we are always very focused on trying to make sure we've got the right balance, but also the right tenure. We really want that knowledge and skill base to stick around and create deep relationships with the advisors they're serving on their teams.
Yeah, that makes sense. Taking a step back from the integration with TDAI, just in the broader ecosystem for wealth management in general, have you noticed any changes in recent years over what advisors are looking for when it comes to their custodial relationship? I mean, traditionally, right, trading, brokerage. But what else is kind of coming into the equation? How, from your perspective, from the lens that you look at the industry through, how are advisors' needs changing?
I think they need more guidance in navigating the complexity of the ecosystem, whether that's technology, which in and of itself is a great enabler, but in a vacuum can cause some real challenges for advisors to navigate and to customize workflows if the complexity of their tech stack is such that it's having to go through too many different systems to get to the right outcome. So I think what we're starting to see is a yearning from advisors relative to simplification of the tech stack and how that can lead to streamlined workflows and efficiency within their back offices. So it's been interesting, right? Over the past decades, you've seen this proliferation of solutions. We embrace open architecture. We embrace all of those solutions. We want to meet the advisors where they want to be met, but we've hit this point. It's a bit of a tipping point where it can be incredibly overwhelming for them to look at that and choose well and choose the right things and spend money in the right ways. And so we're getting asked a lot more now about how they could actually simplify that ecosystem and how we can actually drive solutions that will also help simplify it. So I think that's one aspect. The other aspect, which I find really interesting, is some of the places where there's deeper complexity. Alternative investments is a great example of this. The expectation of advisors is that those things that were historically very paper-based or perhaps not the most elegant solutions, they want the same for that as they have in other areas of efficiency, places where they can do things really quickly, right? Move money, and money movement transactions is a great example of places where there's great depth of automation. 85% of the transactions we get on money movements are coming through digitally. You translate that and compare it to alternative investments, it's a very different story. And again, I think it's just because we're getting to that tail of the more complex product types, whether that's alts, whether that's banking, and really trying to find a way to homogenize those complex spaces and simplify them so that they work the same way that other core custodial functions and technology work. Whether that's trading, whether that's money movements, all of those things have been digital and streamlined for a really, really long time. And we now need to apply that logic and that philosophy to those more complex product suites. And it's a challenge, but I think it's one that the industry has got to rise up to make sure that we're simplifying that wealth management ecosystem for advisors. They have a lot on their plates, and spending time navigating sort of operational headaches on setting up portfolios, managing and rebalancing them, getting the data to talk together with things that they're getting from a variety of third parties. Those all have to get massively simplified from where they stand today.
Yeah, no, for sure. Particularly as your average advisor firm is growing in size and scale and scope, the kind of headaches that maybe bedevil a $200 million RIA just become unsustainable at 2 billion, right?
Mm-hmm.
The alternative thing is interesting because there's so much back and forth with the client and the asset manager and the subscription calls and all the paperwork and the tax reporting. So I imagine that's a really harsh place to try and build out some integrated technology around. Particularly if you have to integrate that into your CRM and into your whatever other platforms you're using. Do you have any way of characterizing the movement towards a unified platform that you're seeing that demand grow, as you say? And I don't know how you would characterize it, if there's any kind of, just simply an observation that you're getting less calls about how do I make this CRM work with this trading platform or this thing, versus, hey, can you, Schwab, help me just, put all this under one keyboard?
I think the realization that advisors have come to about all of those tools is it may not matter, right? You may have traded one portfolio management system for another, you traded a CRM for another. Every one of those systems has its own opportunities, has its own benefits. And I don't think there's a perfect, there's not a perfect one size fits all solution. And so I think as they've reconciled that, and as advisors have maybe gone through transitions of platforms now 2 or 3 or even 4 times, that they're hitting that point of saying, I just think that if I could do more with less, if I had 3 really, really good systems that worked together seamlessly, that created some bidirectional API solutions for us, that would be the way to go instead of just adding on and adding on. And so the tenor of the conversations, again, quantification is tough, but I would say our platform teams, when they're talking with either our third-party partner providers or advisors, this is where the conversation is going, which is just help us simplify this, help us, pick less, do more, with less. And I think that's also where we're headed. I've talked a lot about our proprietary platforms, but the truth of the matter is we're at a point where we are spending just as much, if not more time thinking about the external ecosystem and how to simplify that for advisors, regardless of, whether they're doing it because they've got outsourced portfolio solutions with a turnkey asset management provider, or whether they're just trying to make sure that they can create continuity regardless of the number of custodial relationships they have. So I think, it's just certainly thematically proving out in all of the conversations we're having, both with fintech and advisors right now. So I think it's a trend we can't ignore.
Yeah, interesting. And then to throw I know we're coming up to some of our time here, and I got a couple more questions I want to toss at you. Throw into all this the changes coming with artificial intelligence, right? How do you view AI in the advisor space, and how's that going to change the dynamic of what you're doing and what advisors do?
Relative to artificial intelligence, we're still early days. In terms of the RIA sector, how we're using it, there are certainly some regulatory implications on when and how far and how fast we can get there, relative to recommendations, relative to portfolio decisions. So I think in terms of the early days nature of it, the immediate applicability are showing up in a few different ways. One, really around automation of some of the back office tasks that advisors or their personnel might be performing, whether that's note taking, whether that's generating personalized marketing content. And those are some of the places that I think we're seeing some immediate lift already, from what we're hearing from advisors. But I think we have to also be careful. I mentioned the regulatory backdrop. I think the reliability of it, some of the things that are unanswered questions for advisors in our space. There are lots of things to consider, whether it's the intellectual property aspects of it, whether it's how reliable is the data, can we really trust what we're getting out of it? So those things have to get worked through. And what I always try to encourage our own teams and others to think about when we're talking about artificial intelligence is that while generative AI is certainly the sexy topic, I think right now there is a more seasoned aspect of artificial intelligence relative to robotics processing, relative to machine learning, that can really still continue to pay dividends for clients, for advisors, and for us. And so we're really trying to continue to lean into those aspects of it while exploring in a safe way what the generative aspects of it mean to us as an industry, and really mean to us all as people.
Yeah, right, exactly. So the short term is around efficiencies and so maybe workflows and processes, but longer term, who knows, right?
Exactly. Yeah, I think advisors should think about them as support mechanisms for enabling their relationships, and enabling scale so that they and their advisors can focus on those relationships more fulsomely.
Is there any, we know that advisors use maybe 20% of the technology that's available to them, even when they have a platform that they're using, often they don't use it to its full extent. And maybe that's by design. Maybe that's just because they don't, have it's not set up to be fully taken advantage of. How can RIA firms better use their technology? Is that, and maybe I'm not asking this question the right way, but is there something that RIAs are not doing that they should be doing when it comes to technology specifically, that they should think about to take more advantage of it, to get more of the benefit out of?
Yeah, I think a couple of things. I mean, I touched a little bit on just sometimes less is more, and I think a reduction in footprint can help. I think a lot of the challenges with these technologies is that they've all built on over time, and they can all do a lot. Not all the same things, right? But some of the same things. And so if you have 4 or 5 pieces of technology and 3 of them can all do the same thing, do you really need all of that? And so I think some of it's about that simplification aspect that I was touching on before. But I think The other thing that is perhaps underutilized or perhaps not taken advantage of as much is making sure that that technology is powering the right source of personalization for their clients. And I think that unlocks organic growth, which continues to, have ebbs and flows in terms of how advisors are thinking about it. And so if you can think about technology as a means to powering some personalization at scale, and that then in turn unlocking additional time for the teams to more deeply really go at some of the client needs and some of the thornier challenges that their clients are facing at this point in time, that tech can help them unlock a unique offer and also help them segment their client base more effectively. And so I think if people can lean in on that aspect of it, and then I think the other thing I would touch on really is tied to just business intelligence, data insights. We're in an interesting place. Or some advisors doing this really, really well, where they've got a lot of tech resources. They're doing their own data lake. They're figuring out how to mine that data just in time for what they need to curate new offers for their clients. I think others need to lean into more of that and really think about what does that data unlock for them? How could they use it to their benefit in terms of supporting the client and deepening the relationship that they have with them? So those are a couple aspects where I think advisors should probably continue to spend a lot more time.
Yeah, that business intelligence one is interesting. So, this podcast is all about advisor growth and what levers advisors can push or don't need to push as much to activate growth and getting that data around, just simply, how much capacity is needed for the next, $50 million coming in the door. Do you need to, where can you get efficiencies, or do you need to go out and hire? I mean, all those sort of decisions are, there's a data component to making those decisions that probably a lot of advisors aren't taking as much advantage of as they should be.
Yeah, I think that's exactly right, David. And it feels like because people have been at the scale game for so long, we all, like myself included, sometimes we have to take those blinders off of okay, we're so focused on scale so that it can unlock these other things. While you're unlocking that, you can't lose sight of that relationship building and where you're going to go for your next new client. Those things have to work together, not one instead of the other.
Yeah, this is fantastic. We're past our time, so I thank you very much for sticking around longer. I could talk about this stuff all day, but we are getting the hook here. So thank you very much, Jalina Kerr, for joining us on the RIA Edge podcast.
Thank you, David. It was a pleasure.
And thank you for listening. Schwab Advisor Services is a proud supporter of the RIA Edge podcast and independent financial advisors like you. When it comes to your independence, Schwab Advisor Services is all in. They provide industry-leading custody services with no AUM minimums, no custody fees, and digital onboarding for starters. With Schwab, you'll be backed by some of the most passionate folks in the industry with over 35 years of experience helping firms of all sizes. To learn more about everything Schwab can do for you, visit advisorservices.schwab.com.